All right, here we go. Another video here. I wanted to look at Rockwell Medical. Shout out to the Christian. You know who you are. But RMTI, Rockwell Medical, this is a company apparently that does kind of like little dialysis machines and whatnot. But the sales have picked up, and we can see back here it was the first half of 22. The company actually did a 1-for-11 reverse stock split. And we can see that we were kind of holding our own, right? Then we started to really struggle going into 2020, the years before. And then we, again, had the reverse stock split, which obviously drives the stock to go even lower. Stock dropped here to about 81.5 cents. But then, sales started to come in, and apparently everything started to work out for Rockwell Medical. They started to get the losses in check, and the revenue started to come in well above expectations here pretty consistently. If we look back over about the last 7 or 8 quarters, we can see a nice EPS and revenue beat. Look at the revenue, 19.3 million. Estimates were 16.3 million. Beat that by over 18%. And then followed it up with another 19 plus million revenue quarter, beating by about 500,000. We fast forward, we can see an EPS miss here, posting a wider than expected loss, but the revenue still comes in line slightly above what analysts were expecting. Another revenue beat here. Estimates jump up to 22.85. The company posts 23.77, tightening the losses here, beating the EPS loss by about 33%. And we can see again, we posted a tighter than expected loss on a very slight miss on the revenue side by about 500,000, bringing in over 22 million with estimates up here at 22.6 million. So in the immediate short term, that probably killed some momentum. And then we move into the next quarter and we can see we flip the script again, and we have the EPS posting a wider than expected loss, beating on the revenue side though by about 4.5% or roughly $1 million. And then we just started to really start rocking and rolling here. We can see the last 2 quarters have been really good for RMTI here, in my opinion. We're posting 1 cent a share. Analysts were expecting a loss of 3.5 cents. Phenomenal to flip net income positive, and they did it off of only about 25 million in change, as you see here, 25.8 million in revenue for the quarter. Estimates were sub 23 million. So they beat that by almost 2.9% or about 12.5%. And then with that being a stellar quarter here, we can see how it was like slowly climbing up, because technically in the numbers, you could have made the argument that it was undervalued. However, again, they just kind of came off like a mixed quarter, right? And sometimes we're hot, sometimes we're not. So we slowly were kind of bringing them up. And then this quarter here, this big beat, excuse me, this big beat on the revenue side, which again flips them to net income positivity, that's what made it surge, right? So all of a sudden, this stock that was at 180 is now sitting here at 4.5. And then you have a little bit of profit taking. We go into next quarter, and honestly, in my opinion, phenomenal quarter again, obviously. EPS estimates of 1 cent a share. The company comes out, post a nickel, and they did it off of 28.3 million. Analysts were expecting roughly 26.5 million, so they beat that mark by about 1.8 million, 6.8%. So back-to-back strong quarters for RMTI, back-to-back EPS positive quarters for RMTI, and they actually have been consistently upping their guidance. And we'll check that in a second, but I will say this big flip. See how a stock reacts when they hop the fence and they go EPS negative to positive, right? We were speaking about that with certain stocks like the smaller up and comers like SoundHound. Another one is Fubo, right? Saying that they're fighting, they're getting closer and closer to profitability, hopefully. So that's what I mean. When that situation happens, that's when you really see a big explosion. And of course, recently something like Palantir, I also mentioned the premature breakout of the long-term symmetrical triangle, because the company kind of surprised a little early and flipped the script, went net income positive, flipped the script, hopped the fence. I don't know. I always use these weird expressions. But basically, I think what happened here was we brought it kind of to the top of this range. Stock was here at $5 and then just kind of rejected. And I think, in my opinion, just kind of came back down to earth. Because if you go back and read the quarterly report, I personally didn't see anything too negative. And most of these numbers, as we saw, year over year, looking at each quarter, they've been climbing year over year. So now the business is slowly growing. The sales are coming in a little bit more often. And again, we saw on 25 plus million, the company is probably going to be operating at a profit, which, if you think about it, especially in this day and age, when we look at all these different stocks bringing in hundreds of millions, billions of dollars, to be profitable at 25 million, that's a pretty low number in my opinion. And again, if they had to kind of go through this reverse stock split to kind of get all their ducks in a row, and now we're able to beat on the EPS side, and the company looks more financially healthy on paper, and of course we're predicting that sales are going to continue to increase over time. That's why now we could be dealing with a big grower here in this space, in my opinion. And even going back to $5, I think not only could happen, I actually think it will happen, but of course it's all up to the company. We know that. But may go even higher. As we see, we're technically in like this upward channel here, and the top of this range is, again, all right, let's say it happens next quarter here, by next quarter, right? Mid-March. Let's say they beat again and business is still great. So stock could get up here to right around 7.25, we'll call it. That's kind of like the top of this range here. So that could happen. But of course, what you don't want to see is a company like this that just went through a reverse stock split that people may still be hesitant about, even though they're having some decent quarters, because also not only is this a big negative, but also in the technicals, usually when you have a potential kind of upward channel like this, you could potentially kind of be setting yourself up for a breakdown, right? And again, it might not get completely destroyed, but again, this is just a random path, but I'm just showing, like, you know, if we get another 1 or 2 good quarters, like, we're going to continue up in the range and we can get up to the 6s and the 7s. But then all of a sudden, if the company starts missing earnings once or twice, we're going to drop it back down, you know, and then as we approach the 2s and the 3s, if we start to break the bottom support line of this long-term upward channel since the reverse stock split, I mean, I believe technical analysis, correct me if I'm wrong, but an upward channel like this could potentially break downward like that. But again, right now it's up to the company, and I just think similar to what we saw with Fubo, but I'm talking before the lawsuit news. Same thing, right? It went through the reverse stock split, then it started to get the losses in check. It started posting tighter than expected losses, more narrow than expected losses, and then all of a sudden the subs started picking up, the revenue started beating, right? So then it was on the up and up. But then as soon as something bad would happen, boom, that we bring it right back down to the low 2s, right? To the mid 1s, even though we were just at 370, you know? So it's fragile right now. So that's why this is just kind of laid out potentially of what could happen. But again, only if the company really starts struggling in the earnings, in my opinion, because right now they do look pretty decent. And 67 million market cap. Pretty low. Pretty low. Company now bringing in over 20 million a quarter, right? Even though we just went from operating at a loss, excuse me, operating at a loss to now being net income positive for the last 2 quarters. But apparently it was from a large customer, they say. But we can see that just that little bit, that few extra $1 million in revenue really chunked up the margins significantly. And if they can keep it going, that's why, again, I could see $6 or $7, and I think that may even be conservative, believe it or not. Because again, there's a company we were saying, dialysis machines and whatnot. Let's just check the numbers quick, and then we'll get into the news articles and whatnot. Okay, we come down here. Debt 14.18 mil. This time last year, 14.88. Okay, free cash flow completely flipped around, minus 16.1 mil, and now for last quarter, plus 4 million. And cash on hand, even though it doesn't look like a lot here, of about 12.33 million, and you know, the debt, we could say hypothetically cancels out that cash. But if we go back the last couple of quarters, this is the most cash on hand the company's had over the last 5 quarters. 7 million, 9 million, 6 million, 11.8 million. Now we're above 12 million. So, you know, technically this is like the best position they've been in over about the last year and a half, if not longer. But we have short-term assets outweighing liabilities in both the short and the long term. Getting ahead of myself. But here on the balance sheet, equity came down to 9.5 mil, and then has been holding roughly this 20+ million mark. And now for the last 2 quarters, last quarter 23.5 million equity, this quarter over 29 million equity. So now we're trimming down the fat here of these liabilities, while now we were above the 50 million mark, and you can see it slowly dipped down on the assets to 50.7 mil, and now last 2 quarters 53 million, and now last quarter above 57 million. So a lot of these numbers are moving in the right direction, and you can see the book value per share as well completely took a nice chunk up. And we were above $1. We dipped all the way to 57 cents on that sub 10 million equity quarter. And this is why we have to sometimes go through these restructuring phases before we can, almost like the Shawshank analogy, right? We can crawl out of the pipe at the end of the pipe on the other end and, come out squeaky clean, even though we got covered in shit along the way, right? But equity 29 million, book value again jumping up into the 70-cent range, and then 2 quarters ago 76 cents, now last quarter 90 cents. So we're almost back at $1, and with the stock now pulling back from those highs, sitting here at 208, you're trading a little over 2 times book, which really isn't too crazy, especially for a company that is now posting growing fundamentals, especially in this market that's staying up. But yeah, if the debt and the cash cancel each other out, and we have 29 million in equity, and then we come down here, again, this year is better than last year, but if we look at last year, even if we want to be conservative about it, right? They brought in 83.6 million in revenue, and it cost them about 8.5 million to do so. So that would be what, like plus 75 million, plus the 29 positive equity millions, brings us to about 104, 105 million, quote unquote, fair value, in my opinion, which would be roughly 38 million move from here, which is what? We're talking like 60% in change, which would really only bring us to what, like 2 3/4. But again, excuse me, but again, that's quote unquote fair value is about 2 3/4, right? So if we can bring it up, if numbers remain healthy on the earnings side, we can bring it up. We can easily go 2 times, 2.5 times, quote unquote fair value, which again, 2 times 275 would be 5.5, would be 6 1/4 or something, right? You understand? So that's why I'm saying, in my opinion, if they continue to remain strong, seeing the stock get back up to 5, 6, even 7 at the top of that tech range we were looking at, very feasible in my opinion, very feasible. But yeah, quick 2x on the fair value would bring you to what, like 208 million? And that's what I mean. You'd have to chunk it up 1, 2 times. You know what I mean? So in my opinion, I like it. Price to sales, we're trading, 6/10 times sales. We were only trading above 1 times sales twice, but sales have been remaining steady. So bringing that back above 1 times sales is not really asking for too much, in my opinion. We're trading, the price to cash flow dropped down because, again, remember, the cash flow has been improving and the price recently dropped down, so that ratio changes. We're sitting here at about 2 1/4 times book value. Again, book value now is up to 90 cents, was at 76 cents. Enterprise value, supposedly what another company would be willing to pay for it, 62 million. I completely disagree with that valuation. That's just me. Our return percentages were heavily negative, and now we're almost ready to hop the fence. Gross margin was here at 12, low teens, back to single digits, back up to 13.5. Last 2 quarters, 17.6%, and now above 22%. Phenomenal recovery story we may be seeing here in RMTI. Operating margin was minus double digits here, bouncing around minus 2.5, back down to about minus 6, and then goes positive, plus 2%, almost up to 7%. Very nice. Minus 12.5, back up, slightly positive, dips back down negative on the EBITDA, goes up to above 4% 2 quarters ago. Now, as of last quarter, 8.75%. Phenomenal. Phenomenal. Net margin we looked at, we flipped the script 2 quarters ago with that EPS positivity, bringing in over 1% 2 quarters ago, and now 5% net margin percentage last quarter. So looking good on paper right now. And I know they were saying, I think they did an offering or something like a couple of months ago, and they have the ability to maybe potentially raise a couple of more million in capital, they mentioned. So if sales are growing and margins are increasing, and they also, just in case, are able to take out, more capital for themselves. Then, I think we might be in a good spot here with RMTI right now. As long as sales do not plateau or seriously start missing the mark, then in my opinion, we can easily call this a $5 stock, especially since it was just there recently. I think that's pretty conservative. Again, our debt hasn't really moved. Went from high 14 millions to low 14 millions, even though our assets and our equity, everything else has been increasing. So our debt ratios have been going down, which is a good thing. If we look at earnings, we can see the EPS, even though we were operating at a loss, we were more times than not reporting a more narrow loss than Wall Street was expecting here. 2 misses over the last 8 quarters, which is pretty decent success rate. And on the revenue side, just 1 better. 7 out of 8 beats over the last 8 quarters. And we can see even this one was a slight miss, and then they came back, boom, and they beat by over $1 million, right? So you missed by about $500,000, then you come back, boom, you beat by $1 million. And then again, 2 quarters ago, they beat by about $3 million. And then last quarter, they beat by about $1.8 million. So they had their small miss, and then they came back and had some nice shots in the last couple of earnings reports. But we can also see now that we do potentially have some dipping down, because I know they were also saying, talking about one of their agreements with one of their customers, that the customer said that the volume of orders may be a little lighter this year. But of course, there's the clause where they have to at least put in an order for the minimum amount, right? So I know they're still looking to still pretty much guarantee. Well, nothing's guaranteed, but you know what I'm saying. They're set to bring in that consistent income from that customer. But we really are on the up and up. And we can see we're even branching out more to the rest of the world as well. We can see the bulk of the revenue coming here domestically in the States. This is showing in 2023, but we're up to almost 10 million now outside. So that's a good sign. So obviously what that tells me is they have decent products and they work, right? That's basically what we're seeing here. And again, maybe just like we said with Fubo, sometimes you got to do what you got to do, right? And if you fall out of compliance and you can't get the ship straight in time, then if you want to maintain that compliance, sometimes you got to do a reverse stock split. Sometimes you got to do what you got to do. And it seems like, again, it's been, like a year and a half or so since the reverse stock split. So far, so good, right? So far, so good. That's why something like this, in my opinion, I would focus more on the numbers and, not really worry like what the chart's doing or where they're taking the stock after a decent report, right? It came down when you would think it would go back up, right? You understand? In my opinion, I wouldn't even worry about that. I would just keep an eye on these numbers and just make sure everything's moving along steadily and swimmingly. And if it is, then a lot of your questions may already be answered. If you know what I mean. Here I like to just bring up FinViz because apparently, everything might be a short squeeze play, but no, just kidding. But right now, short float on RMTI, 3.5%. And the reason why I think it's so low, 2, 3, 5%, that's really nothing. And the reason why it's so low, in my opinion, is because this would be a very hard stock to try to time the drop because they've been financially improving, right? So that's why, again, we just crunched some numbers. I came up with fair value of about 100 million, which would, again, bring us up to, 3 plus back up here above the moving average. So here, even with it pulling back, I mean, obviously here, ideally, in hindsight, was the best time to short the stock. But that's what I mean. Even here, like, you can't short it down here at 2, really. And even if it goes and rebounds back to the moving average of above 3, it's still not worth it to try to short it and get a play back down to 2.25. It's just not worth it because it'll most likely bounce up. You know what I mean? In my opinion, that's the way I'm personally looking at it. So this, I can appreciate why the short float is so low. This is not on the radar of a short seller trader, right? But MACD recently crossed to the downside again. We were up and up. Look at the test on the 200-day moving average, but we popped up and we dropped it back down to the 50-day and now below the 50-day. But again, in my opinion, I think it's pretty decent here at about $2. And if it does drop down into the ones, you might be better off for it. RSI almost looks like a weird squiggly head and shoulders, but we dropped down big. Obviously, we were sitting basically at that 70 benchmark, dropped down to the 40s, sitting here 42.5. So that's why after a big run up and, we're coming back and having a decent year, maybe they might, quiet it down, try to beat up everyone's confidence, bring it back under the radar, and then it bottoms out. And then all of a sudden it's awesome again, right? So something to keep in mind, in my opinion. Oh, that was the weekly. We look at the daily here, we can see, yeah, we were riding low. Looks like the stock was just tightly forming this descending wedge. And then I think right here was where they got a purchase order or extended a contract. So the stock popped. But look, right? It was down here at like 197, 199. And then off the news of the order, it pops up to like 230. And then it immediately goes right back down to where it was. So if it was, here, and then they got good news, so to buy here would be a decent call, in my opinion. And then you get instant value off the order, but then you pull it back right to where it was. So you're essentially almost getting even this short-term value for this price right here. Right? You understand? So in my opinion, that's the way I look at it. But again, could it drop to 150, 125? Of course, anything can happen. At the same time, if all of a sudden it starts rebounding and next thing we know it's at 3.25, would I be surprised? Not at all, because it's been performing well. And again, the numbers, in my opinion, are improving significantly well here, quarter over quarter. MACD recently crossed to the upside as we were dropping down into this wedge, and then boom, you get some timing of the order, pops it out beautifully. But again, climbing back to this 200-day moving average, very, very feasible. That would be, about 240. Again, I'm trying to be, conservative. I don't. You can't just come out and say, "Oh, see this $2 stock? It's going to go to 10. Buy now, buy now." You can't. Even though those are the only thumbnails and video titles I see, but you can't. You just can't. People ask me now. Again, my cash is tight. For the record, people ask me how come I don't have larger positions. I'm cash poor right now. Made the YouTube channel. Again, the ad revenue, however they do it, but it's slowly starting to trickle in now. And again, you guys can join the Discord if you'd like. And I always mention in the Discord to everybody, hey, listen, I moved a couple of bucks over. I'm buying a couple of shares of this, or, I bought a call in that. So I always try to disclose it to everybody. But, for those of you wondering, oh, well, would you buy this? Are you going to buy this? I mean, if I had the cash, I probably would start to build a position here at $2, in my opinion. But, the larger the channel gets, obviously, the more I would make. So as that just slowly continues to happen, I'm going to, slowly probably piece my way into a lot of these good companies that we looked at. Because we looked at a lot of companies on this channel. PPC, Chicken Company, right? We got Rolls-Royce. Still seems under the radar, in my opinion. You got companies like this, medical supplies. I mean, we just have just this whole buffet of really decent companies out there. And all you have to do, this is why I like to utilize the Buffett method. And this is why something like this, perfect example. So again, shout out to the Christian, I believe his name is. But let yourself be known. I'll pin your comment. But, he mentioned this and he was like, listen, the numbers look decent, but I don't know, the stock is down. Like, am I going crazy? What do you think about this? And this is phenomenal. This is phenomenal. In my opinion, this is what you want. A company just like we're seeing, the margins are growing. All of a sudden, we hopped a fence. We went net income positive. We have steady orders coming in, right? Customers are extending contracts with us, right? Putting in new orders out. Next year, we just upped guidance, right? We keep upping our guidance. So that's what I mean. All those good things, and the stock is now potentially, quote unquote, on sale or near fair value, undervalue. So you say thank you, and you accumulate shares and build a position. If you like it, of course. Do your own due diligence. Take a look at this. But RSI here on the daily, 37.5. But you can see we just bottomed out. We had a little bump, and now we're curling. So, right, we might be on the up and up now, maybe going back to the 50s. And then we chill for a little bit, and then, boom, we jump up into the 70s again, right? Because, again, technically, I think it's worth owning just because the numbers are improving. But let's look at anything. Here we go. Product purchase agreement. This was a couple of days ago on the 17th. Shares popped almost 17% pre-market. Company enters a purchase agreement for its hemodialysis product, Sterilite, that is expected to generate upwards of $10 million in net sales in 2025. Says the agreement has an effective term up to 5 years and includes incremental price increase for the product. Okay. Phenomenal. We like orders coming in, right? Joined the company in October, 25 years experience. So that's a good sign. Rockwell maintained by at H.C. Wainwright. This was, about a week or so after last earnings. Price target cut to 7 from 9. Well, 9 was a little extreme. Maybe they were expecting those big orders like they recently got to come in a little sooner, right? So maybe they were looking on the up and up. I mean, 9, might be viewed as a little too much, a little overvalued. But hey, at least, as someone who analyzes stocks here, I respect it. Swinging for the fences, $9. I could see it. Yeah, okay. I respect it. But pulling back here, 7, like we said, is essentially the top end of this range. So 7 looks about right. 9 might have been might have got a little ahead of yourself. But again, I respect it. Director sells shares. Initiated by. Price target announced at $5 a share. See what I mean? That's what I mean. If fair value is like $2.70, you know what I mean? Even if you go 1.5 times, quote unquote, fair value, you're still looking at $4 a share, which is roughly almost 100% move from where we are right now. That's why it'd be hard for someone to come out and say, $1.20. I don't see that happening. Could happen, but I don't see it happening. And November 12th here, we had the earnings. Let's see. I've been talking so much today, my throat is just dry. I need something to drink, but I'm up here doing a video. Can't go get a drink right now. Bear with me. Net product sales, $28.3 million, a 31% increase over the same period last year. Phenomenal. Company's gross profit surged by 183% to $6.2 million. Gross margin at 22%, up from 9% last year. Net income, $1.7 million, substantial improvement from a net loss of $1.9 million. And this is what I mean, on the up and up. Adjusted EBITDA also showed a positive trend, reaching $2.8 million compared to a negative $1.2 same period last year. Included a special large order, premium price products from its largest customer. Notice of extension for its amended and restated products purchase agreement, extended through December of 25. Beautiful. Despite an expected decline, despite an expected decline in volumes from this customer, Rockwell Medical is focusing on higher margin products and new customer contracts to offset the projected revenue gap. But they also say that, hold on. Additionally, Rockwell Medical has a multi-million-dollar distribution product purchase agreement leading at home. Company also renewed its supply agreement with Aqua Dialysis to all of Aqua Dialysis's Texas-based clinics. Okay, beautiful. Actively diversifying. Several new higher margin customer contracts and distribution agreements. So that's what I mean. A situation like this, if we brought it kind of quote unquote back down to reality here at $2, right? But now, if we're going to keep getting news of orders coming in, that's why, in my opinion, I put a buy on this. And again, this is why I say something like $5 is actually pretty conservative, especially if you're able to hold this for the long term. These initiatives expect to help the company maintain profitability in 25, despite the anticipated decline in revenue from its largest customer, right? So, again, we can see, even though the biggest customer might say, hey, listen, I might need a few less this year, at the same time, we have to remember, they're still branching out, right? They're still doing their cold calls and whatnot. They're still trying to gain new customers. And I'm sure even if you hear about 2 or 3, even if you hear about 2 or 3 new customers and clients coming in now for 2025, that still probably might be enough to offset, as they said, that little dip down in revenue from the big guy. We are, quote, incredibly pleased with our financial results for the third quarter of 24. Our achievements reflect the continued improvements we are making here at Rockwell, building upon a robust foundational business. We are working to expand our hemodialysis product portfolio and introduce new products to the market in 2025. Rockwell has updated its 24 guidance, projecting net product sales between 98 and 101 million, gross profit between 15 and 17 million, and adjusted EBITDA between 4 and 5 million. The company remains confident in its ability to achieve these targets through strategic initiatives and operational efficiencies. Sounds good to me. And this is the 10Q. Let me just see here. Sales are up 19% from last year. Gross profit 22%. Okay. Operating income. Right, we went 1.9 positive. We had a loss. Net income. EPS. Okay. Several key factors. Okay. DaVita accounted for approximately 52% of total net sales for the quarter and 47% for the 9 months. We're reading. Yeah, see, net sales to DaVita in 2025 will decline between approximately 31 and 37 million. And that's the one they just extended through to December of 2025. So still going to be doing a decent amount of business, just a little less than the year before, which is why, again, I say it's up to the company now. It's up to their sales team. If they're really able to bring new clients in, then everything will be okay. In my opinion, they'll continue to beat earnings, and we may be looking at a stock on sale. If all of a sudden we start hitting and missing and we're not able to meet the mark, and, now revenue's starting to dip down because, one big customer isn't buying enough, then that's obviously going to be viewed as a big negative, which is why I pointed out the potential path of that upward channel and then that breakdown maybe back into the one. So this is something again, it's fragile right now. So you have to keep an eye on this from quarter to quarter. If not week to week, if you can, of course, but at least month to month, I'd say. Company plans to transfer the manufacturing of the former Evoqua product line to its own facilities by the end of 24, that's now, to reduce production costs. Well, that sounds good. Implemented cost containment activities, focus on acquiring new customers. Yeah, this is what I was talking about before. Rockwell raised $6.4 million through its at-the-market facility, with approximately $4.5 million remaining available for future use, right? So this is what I mean. We kind of are keeping our debt in check. We have more cash on hand now than we've had over the last couple of quarters. We can tap in, for another $4 million and change if we need it. So right now, in my opinion, it looks pretty decent. Company also issued a warrant. Provides interest-only payment. Extends maturity date to January of 2029. If they keep doing what they're doing, that's going to be a nothing burger. That's it. We got to start using that now. Rockwell has been actively managing its debt, prepaying $5 million in term loans. Payable Looking ahead, Rockwell continues to focus. Existing customers. Looking for collaborations, acquisitions. Okay, beautiful. Okay. I just want to double check if we're missing anything big here. Upgraded to buy from who? Oh, Zach's. Okay, upgraded them to buy. That was back in October. Yep. When the earnings get better, the stock is now a buy for the most part. Unless it's overvalued to begin with, of course. But Rockwell files $100 million mixture security shelf. This was back first week of October. Potential sale $100 million from time to time. Company said we'll use proceeds. Shares were down 1% on that news. Still trading at a bargain. My goodness, look at all this. But then again, I really can't complain because I'll make a video and it'll be 48 minutes. So revenue forecast raise. So this was back 2 quarters ago. Yeah, so the wait, hold on. Let me find, what was it? The 10, where was it? I remember, I was looking at it before. I don't remember. Was it the 10Q? Might have been the 10Q. Bear with me. No, no. I don't think it was that. I don't think it was that. This was for last quarter in November. Rockwell updated his 24 guidance, projecting, yeah, net sales, gross profit. Yeah, we read that. We read that. Where was, oh, here we go. So we can see practically all of these numbers again for the record went from losses to positives. This is 3 months. This is the 9 months. We're reading. And here, guidance. This is what I wanted to look at. Okay, guidance for net product sales, right? Look at the increase of these numbers here, quarter over quarter throughout 24, okay? This is as of March 21st, 2024, net product sales, 84 to 88 million. Then they beefed it up to 90 to 94, then 95 to 98, now 98 to 101. Gross profit following along with it, 12 to 14 mil, 13 to 15, 14 to 16, 15 to 17. We're consistently upping not only top of the range, but min range as well, the minimum, the bottom. Gross margin, 14 to 16, 14 to 16%, now up to 14 to 17. Now we're up to 16 to 18 as of last quarter. Adjusted EBITDA, again, look at this. Oh yeah, maybe a couple of 100,000. Maybe we'll get close to 1 million. 0.75 million to 1.5 million, right? So, oh yeah, maybe we'll bring it in about 1 million. Now, as of last quarter, 4 to 5 million. Big jumps. And again, I can appreciate the fact, oh, it was a big order from, their largest customer. I understand. I can appreciate that. But it came in, right? But it came in. It's coming in. So, in my opinion, I like it. And we don't have to beat this. That's pretty much everything I wanted to say, even though I probably spoke longer than I always wanted to. But hey, it's my trademark, right, baby? But yeah, I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up, algorithm, helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a great weekend.